Good morning, everyone. I'd like to welcome you all to the Global Energy Outlook Forum 2026. We start our around the globe 12-hour insight and prediction cycle for the energy markets. We start in Asia, and I'm delighted to welcome Mr. Kieran Gallagher, head of Asia for Vitol and member of the Vitol Executive Committee, to set the scene for us as we start in the region with a discussion on how global economic performance is likely to shape energy consumption across Asia, and how the trading community may be positioning themselves for what they may be forecasting and expecting accordingly. Kieran, so thank you so much for joining us this morning.
Thank you, Diala. Good morning and Happy New Year. And indeed, best wishes for today. You've got a little bit of a marathon ahead of you.
We do indeed. And great to have you to start that off for us. Let me start by asking you on your outlook for Asian energy demand growth in general, for a 3,000-foot view, I suppose, for the year ahead. And also then, therefore, what are traders in January thinking might materialize, and how might they be positioning themselves? Or is it too soon for that?
Not sure it's too soon. It is quite a varied outlook within the region. However, the construction sector in China continues to be a little bit of a lag, and therefore, we don't expect the economic performance in China to be as healthy as we would like. But there's some very positive signals. India continues to grow. Vietnam is performing well. In Malaysia, Pakistan is obviously stabilized, and there's some good signs of growth there. But alongside China, it's not looking perhaps as rosy in South Korea, Philippines, or indeed Thailand. So within the region itself, it's obviously quite varied. We would still see economic growth somewhere north of 3%, though maybe heading for 3.25%, and that is obviously quite stable, down from low fours in 2025. But still, there is a build at least.
Okay, I mean, and you mentioned that's great to have that sort of across the region summary, if you like. Let's talk a bit about China. Quite a bit of commentary as we ended the year last year on how obviously Chinese demand, as it always does, support global oil demand, but that in fact the last year or two has been a lot of, storage-related imports as opposed to meeting consumption needs of the economy. You just started by saying that the property sector is still weighing on economic performance, but that has been a huge support, hasn't it? With apparently 500 to 800 barrels a day of imports into China, many saying most of that's gone into, not most of it, but a lot going into storage. So what is the outlook in the year ahead? More of that expected? And if we lose that storage demand for whatever reason, what does that mean for oil prices, I suppose, and for producers looking to supply the country?
Well, first, I would say, traders and analysts, they vary somewhat in the numbers. You said 500 to 800, even that 300 high low is quite a lot. I think, even, end of year summations around Singapore, etc., like that. I think the kind of storied view, if you will, was 140 to 150 million barrels of crude gone into the SPR during 2025. Yes, that took a lot of the perceived oversupply out of the market. And I think, we, like others, are looking at crude fundamentals and do see, somewhat of a heavy market or heavy fundamentals going into the new year. And so that's going to be a big question. I think you can't really surmise around what that number might be for the year ahead without looking at the price point. If we stay around low 60s or dip into the 50s, you would expect further buying for SPR purposes for China. And I'm not so sure it would surpass the 2025 number, but could it get close? I think it could, yes.
Okay, and in terms of, from our information, what about, it's one thing to want to take advantage of those low prices. From what we know, is there enough storage capacity? I know they're building more capacity, of course, every day, but could they be reaching the sort of max storage capacity that they have?
Well, that's a question everyone would like the answer to.
Right.
It would unlock a lot of secrets in the global crude market, actually. But yeah, as I said, we wouldn't be wholly surprised if the storage build was towards the 2025 number again, which does obviously in itself point to further ullage in storage tanks around China.
Okay. Well, I mean, I'd like to stick to China just for now, and then we can perhaps again go broader. But let's talk a bit about its energy transition policies. Obviously, huge headway made and huge investments, renewables expansion, very successful by China. I mean, again, a lot of talk now that this is, fast forwarding and speeding up for energy security reasons when we look at all the geopolitical dimensions that we're seeing globally. But what does that mean in the immediate sense, again, for, oil demand patterns in Asia's power and industrial and petchem sectors over the next 3 to 5 years? Are we going to see that clean energy investment sort of take more out of that demand, if you like, or do producers have demand security still from China for all those elements?
I think there's still an element of demand security for crude and LNG, etc. But there has been an undoubted shift, as we've seen in the last few years. But even looking forward now, there's been a pivot really in the latest 5-year plan, whereby China have set out some very firm objectives for 2035, and with regards to energy consumption and the non-fossil part of that energy consumption, the objective is to get to 30%. Now they're probably just north of 20%, but that's a huge shift, and that's probably twice the rate of the EU, for example. So we're certainly seeing a very firm, 9 years ahead, continued transition away from fossil, and therefore, yeah, it's the market needs to adapt to that.
Absolutely. I mean, we're talking about China versus EU. If we just touch on LNG demand, I mean, again, just to generalize, last year was subdued LNG demand into China versus Europe. Okay, smaller volumes, smaller consumption, but they kind of were seen as supporting the LNG market because of weather patterns, etc., other factors. Again, outlook for 2026, could we see a rebound in LNG demand from the Asia Pacific region? And if so, why and how might that impact even, I suppose, Europe as well?
Again, price comes into it, and current TTF and JKM prices. I think it is quite attractive. But I think with regards to China and its consumption, again, the economy has been a little bit sluggish. They have invested in their domestic gas infrastructure also, and therefore, when you look forward through 2026, of course, the expectation towards the back end of the year and going into early 27 is that there's an awful lot more LNG to come onto the market, particularly from Qatar, and therefore you would expect to be somewhat incentivized to increase or pivot towards more imported LNG.
Absolutely. What about the petchem, Kieran? Just to touch on the petchem sector, obviously huge expansion, huge projects there that China's investing in, not just on its own turf, but abroad as well. But there again, there has been talk of a bit of an oversupply there of petchem products globally, and that also, may be impacting China's re-export, let's say. Plans there. Do you see any change of pattern there for the country in the year ahead?
No, it's obviously it's been a hot topic over the last year in particular, and it's something our own analysts in Vitol spend an awful lot of time on. I think we're still quite constructive in that sector in terms of their demand for feedstock for the petrochemical sector. As you say, they've now expanded their horizons and investing in Middle East as well, some joint ventures, etc., in that space. But when you take the various segments, I would say petchem is probably a standout for growth in China in our 2026 outlook versus transport fuels, for example, or indeed LNG. So I still think we're quite positive, and I know, yes, there, towards Q4 as well, there were some elements within the petchem sector that pointed to some products being in oversupply, but I think the overall sector demand remains robust.
Okay. I mean, a conversation wouldn't be complete without talking about tariffs. And of course, those have been placed on across Asia, Southeast Asia, which, by all accounts, did not too bad last year because it was acting as a sort of substitute for Chinese goods, if you like, circumventing. So that was a positive surprise. China seemed to do all right as well. And again, it has a hiatus, doesn't it, in terms of until October this year. But again, that uncertainty in terms of planning for manufacturing as well, and in the re-export supply chain reshuffling. Again, how much is that uncertainty going to weigh, do you think, on people's forecasts for energy demand into China and indeed into the region? Have we settled into a new normal after the last year?
Well, energy markets adapt pretty quickly, but the in terms of the disruption, if you take dry goods and electronics and the like, which post tariffs there were some supply disruptions, etc. But if you look back holistically over 2025, from what we can see anyway, Chinese exports were pretty much on par with 2024. May have ended up or going via some certain other transit points, etc., like that. But the total exports remained quite high. I'm not sure there's a new normal. There's a bit more stability, and I think given geopolitical events from June onwards, really, it's somewhat overshadowed what had happened in the early part of 2025 and where tariffs certainly dominated and where we sit in Singapore and in Southeast Asia in particular was massively impacted for 6 to 8 weeks with that uncertainty. Certainly now there's a lot more stability. Trade deals have been done, and trade routes are somewhat back to normal.
Okay, and I mean, let's also just touch on, Kieran, if it's okay, sanctioned oil, of course, into Asia. You got the Russian, you got the Iranian oil, and of course the Venezuelan oil, which have all made their way, continue to make their way into Asia. China, of course, taking a lot of Iranian oil. But I mean, of course, we've seen developments now in Venezuela. We're not going to talk about what might happen next, but just any immediate assumptions by traders of, I know that the oil has been heavily sanctioned anyway since December, but people are saying that, well, if that increases, we could see actual sort of sanctioned barrels that have been leaving Venezuela drop by a third. Now that's about 300,000 barrels a day, I think. Not all going, of course, to China, but is there concern about that in the immediate sense? The next 6 months, could we see that volume change significantly? And if so, would traders be positioning themselves already or again, wait and see?
I would say perhaps not concern, I would say focus. I would say it's attracting a huge amount of focus. And as you said, a lot of this happened in December. We're still in early January. And therefore, the focus I talk about is oil on water. And I think there's a general consensus that we will, in the short term anyway, see a build of oil on water. Maybe more so on the Russian side than the Venezuelan side, but again, by the time you're finished today's marathon, as we called it at the start of the call, there's probably going to be another announcement around Venezuela. That is very much a live event as we see it, and therefore, I'm not sure there's too much positioning going on around that right now.
Okay, yeah, but the oil and water point is relevant, isn't it? Because a lot of people, that's just making estimates of what actually is being taken in at any given time. A bit more difficult to forecast. Kieran Gallagher, Head of Asia for Vitol, thank you so much for joining us this morning on the Energy Outlook Forum.
Pleasure. Thank you.